Picture this. You've got $100 in your bank account, and somewhere in the back of your mind, you're doing that math, that dangerous math, the math that goes, even if I invest this and it doubles, that's only $200. And if I need $1 million to retire, I'd need to double it like 13 more times. That's going to take forever. What's even the point? Here's the thing. While you're doing that math and talking yourself out of starting, you're making the single biggest wealth-killing mistake that keeps people broke their entire lives. You're treating investing like addition when it's actually multiplication. And that difference, that's the difference between dying broke and retiring a millionaire. Now look, I know what you're thinking. Chris, there's no way $100 becomes $1 million. That's just not realistic. And you're right, sort of. $100 sitting by itself, untouched, even getting great returns, that's probably not getting you to $1 million in your lifetime. But here's what most people don't realize. That $100 isn't the end. It's the ignition. It's the psychological catalyst that transforms how you think about money forever. And that transformation, that's what creates millionaires. My name is Chris, and I spend way too much time thinking about the exact moment when people go from broke to wealthy, and why most people never make that leap. If you're someone who looks at your bank account and thinks you don't have enough to start investing, or you're waiting until you make more money, or you think becoming a millionaire is for other people but not for you, hit subscribe and give this video a thumbs up, because by the end of this video, you're going to understand the actual mathematical and psychological path from $100 to $1 million. And more importantly, you're going to know exactly what to do today. So let's start with the uncomfortable truth. $100 invested in the S&P 500, even if it gets the historical average of about 10% annually, takes about 95 years to become $1 million, which means unless you're a baby watching this video, that's not the path. But here's where it gets interesting. Nobody who became a millionaire through investing did it by investing $100 once and walking away. They did it by investing $100 and then fundamentally changing their relationship with money. They did it by turning that $100 into a habit. And habits, compounded over time, create wealth that looks impossible from the outside. Let me show you the real math, the math that actually works, the math that turns regular people into millionaires. If you invest $100 today and then add just $200 a month every single month for 35 years at a 10% average annual return, you end up with $1.1 million. Let me say that again. $100 start, $200 a month, 35 years gets you to millionaire status. Now you might be thinking, $200 a month? I don't have $200 a month. And look, maybe you don't right now, but here's what most people don't realize. You're not supposed to invest $200 a month right now. You're supposed to invest whatever you can right now and then increase it as your income grows. This is the psychological shift that changes everything. Most people think about investing in terms of what they can afford today, but wealthy people think about investing in terms of what they're becoming. They know that in 3 years, they'll probably make more money, in 5 years, even more, in 10 years, significantly more, and they build their investment strategy around that trajectory, not around their current moment. Here's what this actually looks like in practice. You start with that $100. Then maybe you invest $25 a month for the first year. That's it, $25. That's one dinner out. That's 2 fancy coffees a week. That's completely doable for most people who are watching this video. But here's where the magic happens. In year 2, you get a raise. Maybe you go from making $40,000 to $43,000. That's $3,000 more a year, or $250 a month. Most people immediately inflate their lifestyle to match that raise. Bigger apartment, nicer car, more takeout. But if you've spent the last year being an investor, you make a different choice. You take half that raise and invest it. Now you're investing $150 a month instead of $25. Year 3, another raise. Or maybe you switch jobs and jump from 43 to 50. Now you're making $7,000 more annually. Again, you take half and invest it. Now you're at $400 a month. And this is where people start to feel it. $400 a month feels significant. Your portfolio is growing by almost $5,000 a year from contributions alone, plus whatever the market is doing. By year 5, you're investing $700 a month. By year 10, maybe $1,000. And the crazy thing, it doesn't feel hard anymore because your income grew alongside your investing habit. You never felt like you were sacrificing. You just didn't inflate your lifestyle as fast as your income grew. There's actually a term for this. It's called paying yourself first, but it's really about locking in raises before lifestyle inflation steals them. And here's the shocking statistic. According to research from the Federal Reserve, the average person who gets a raise increases their spending by 92% of that raise within the first year. 92%. They give themselves an 8% raise and the rest to restaurants, streaming services, and slightly nicer stuff they don't actually need. But the people who become millionaires, they flip that ratio. They keep their lifestyle mostly flat and invest the raises. And over 20, 30 years, that difference is the difference between retiring broke and retiring with 7 figures. Now look, some of you are doing the math right now and thinking, okay, Chris, but even if I invest aggressively and get great returns, I'm not getting to $1 million in 10 years. This is still a 30-year plan. That's too long. And here's my answer to that. You're right. Building wealth through index fund investing is a long game. It's not exciting, it's not sexy, it's not going to make you a millionaire by 30 unless you're making massive money and investing massive amounts. But here's what most people don't realize. That long game foundation is what gives you the freedom to take smart risks with other money. See, the people who actually get to $1 million faster than 30 years aren't just investing in index funds. They're using their investment knowledge and habits as a foundation to take calculated risks that can accelerate wealth. Maybe at year 5, when you've got $30,000 in your investment account and you deeply understand how markets work because you've been watching them for 5 years, you decide to put $5,000 into individual stocks that you've researched. Maybe one of them triples. Now you're ahead of schedule. Maybe at year 8, you've been maxing out your Roth IRA and you've built enough wealth that you can afford a down payment on a rental property. Now you're building equity in real estate while your stock portfolio compounds. Maybe at year 10, you start a side business with $10,000 from your investment account, and that business generates an extra $30,000 a year in profit that you funnel back into investments. This is how people actually get to $1 million faster than the base math suggests. They don't abandon the boring index fund strategy. They use it as a foundation, as proof that they can build wealth systematically, and then they layer on calculated risks that have asymmetric upside. But here's the critical thing. None of that works if you don't start with the $100, because that $100 isn't about the money. It's about the identity shift. It's about becoming the kind of person who invests instead of the kind of person who spends everything they make. Let me tell you the psychology here, because this is where most financial advice completely misses the point. There's this concept in behavioral economics called present bias. It's the tendency to overvalue immediate rewards and undervalue future rewards. It's why we'll spend $5 on coffee today, even though we intellectually know that $5 invested weekly for 30 years becomes over $50,000. Our brains are literally wired to prioritize now over later. And the only way to overcome that wiring isn't through willpower, it's through identity. Once you see yourself as an investor, the pain of not investing becomes greater than the pleasure of spending. The person who invests $100 today and watches it grow isn't the same person who had $100 and was thinking about what to buy with it. They've crossed a psychological threshold.
Here's what I want you to do. Take that $100, open a brokerage account today. Fidelity, Schwab, Robinhood, doesn't matter. Put 50 into VTI or VOO. Put the other 50 into 2 or 3 companies you're genuinely interested in, not because you think they're gonna moon, but because you want to learn how individual stocks behave. Then set up an automatic investment, even if it's $10 a week, even if it's 5. The amount doesn't matter as much as the automation, because every time that money automatically leaves your checking account and goes into your investment account, you're reinforcing the identity. You're telling yourself, I'm the kind of person who invests. And here's what happens over the next year. You'll get your first raise or tax refund or bonus, and you'll have a choice: upgrade your life or invest more. And if you've spent the last 6 months being an investor, watching your account grow, experiencing the emotional reality of being someone who owns assets, you'll make a different choice than you would have made before. You'll invest half that raise, or all of it, because you'll have experienced something that non-investors can't understand. You'll have felt what it's like to watch money work for you instead of working for money. Now let's talk about the scenarios where this gets to $1 million faster, because I want to be realistic with you. The base case, investing modest amounts consistently over 30 years, works, but it's slow. Here's how people accelerate it. Scenario 1, career growth plus aggressive investing. You start at $40,000 a year. You invest that first 100 plus 25 a month, but you're also aggressively building your career. You're learning skills, switching jobs every 2 to 3 years for raises, getting promoted. By year 5, you're making $70,000. By year 10, $90,000. By year 15, you're making $120,000 and investing $2,000 a month. At that rate, you hit $1 million in 22 years, not 35. Scenario 2, side business leverage. You build that investing habit with your $100. By year 3, you've got $15,000 invested. You take $5,000 of it and start a side business, something simple: freelance consulting, an online course, a product you sell on Amazon. It makes $20,000 profit in year 1. You invest all of it. Year 2, it makes $40,000. You scale it. By year 6, that side business is generating $100,000 annually, and you're investing $80,000 of it. You hit $1 million in 12 years. Scenario 3, real estate stacking. You invest that $100 and build the habit. By year 7, you've got $60,000 invested. You take $30,000 as a down payment on a rental property in a growing area. The property appreciates and generates cash flow. You use that cash flow to invest more in stocks. By year 12, you've got $200,000 in stocks and $200,000 in real estate equity. You leverage that equity to buy another property. By year 18, you're a millionaire across stocks and real estate. None of these scenarios are fantasy. These are the actual paths that regular people take to build 7-figure wealth. But here's what they all have in common. They all started with that $100. They all built the investing habit first. They all learned how markets work by having skin in the game. And they all used that foundation to take calculated risks that accelerated their wealth. Here's what most people don't realize. The biggest wealth killer isn't bad investments. It's not starting. It's waiting until everything is perfect, until you have more money, until you understand everything, until the market looks better. And while you're waiting, years pass. Years where you could have been learning. Years where you could have been compounding. Years where you could have been building the psychological muscle that turns you into someone who can actually handle having $1 million. Because here's the uncomfortable truth. Most people who suddenly get $1 million, whether through inheritance or lottery or whatever, lose it within a few years, not because they're stupid, but because they don't have the psychological infrastructure to be a millionaire. They haven't spent years watching accounts grow. They haven't experienced market crashes and recoveries. They haven't built the identity of someone who owns significant assets. But when you build wealth slowly, starting with $100 and growing it over decades, you're not just building the money, you're building the person who can keep the money. You're becoming someone who doesn't panic when the market drops 20% because you've seen it happen before and you've watched it recover. You're becoming someone who doesn't lifestyle inflate the second they get a raise because they've trained themselves to invest first. Let me give you the harsh reality check. If you're watching this video and you don't invest that $100 this week, you're probably not going to invest it next month either, or next year, because the same thinking that makes you hesitate now will make you hesitate then. You'll always have a reason to wait, always have something more important to spend it on, always have some uncertainty about the market. But if you invest it today, something shifts. You cross the threshold from person who thinks about investing to person who invests. And that shift, as small as it seems, is the difference between every financial outcome in your life. Here's the specific action plan. Today, before you go to bed, open a brokerage account. Transfer that $100, buy your first investments, set up an automatic weekly or monthly investment of whatever amount you can genuinely commit to. Put a calendar reminder in your phone for 1 year from today with the note, check how much you've invested and grown this year. Then, every time you get a raise or bonus or tax refund, ask yourself one question: how much of this can I invest before I get used to having it, and invest that amount immediately, before lifestyle inflation has a chance to steal it. Do that consistently for 20 years and you'll be a millionaire. Not because $100 magically became $1 million, but because you became the kind of person who systematically builds wealth, who invests raises instead of spending, who takes calculated risks from a foundation of smart, boring index fund investing, who doesn't panic when markets crash because they've seen crashes before and they know they're buying opportunities. That's the path. It's not complicated, it's not sexy, it doesn't involve crypto schemes or day trading or secret stock picks. It's just math and psychology and consistency. $100 today, regular investments forever, raises invested instead of spent, compounding doing its work over decades. The difference between you and a millionaire isn't intelligence or luck or connections, it's whether you start today or keep waiting for someday. You've got $100. You know exactly what to do with it. The only question is whether you're going to do it. If this video convinced you to finally start investing, hit that subscribe button, and more importantly, go open that account right now, before you watch another video, before you research more, before you talk yourself out of it again. Go do it. Because 5 years from now, you're either going to wish you started today or you're going to be grateful you did.